Hello, everyone. Thanks again for joining us today. I'm very grateful today to be joined by Mike Sell from Alquity. How are you doing, Mike?
I'm great, thank you. How are you doing?
No, I'm doing good. Mike's the head of global emerging market equities at Alquity. I won't go into too much detail as to who Alquity are because I've done a recording here already with one of his colleagues, Suresh Mistry. He went into some really good detail. One thing he particularly highlighted was the Transforming Lives Foundation, which is a superb part of what Alquity do. I'll hand over to Mike in a second. He's going to talk about the Asia Fund, which we do invest in at the moment, and he's got some good updates. I think he thinks there are good times ahead. So, Mike, you've got a presentation here that you want to share with us. I'll hand over to you, and you give us your thoughts.
Great, thanks, Haydon, and thank you everyone for tuning in. For us at Alquity, and we've been investing here for over a decade, and myself, I've been investing in emerging markets for coming up 30 years now. We very much believe that the way to invest is to focus on long-term structural drivers that are primarily domestic. It goes without saying that the companies have to have the highest standards of ESG, and our portfolios have to have real impact as well. But starting firstly, looking at these structural themes, and there's three we've laid out here. The first one, and perhaps the most important one, is demographics. And these two population pyramids are for India, and they show the number of households who are in the consuming class, which is the high and the upper middle income segments. And back in 2021, there were 77 million households, and that's projected to rise by almost 100 million households by 2030. Now, 100 million households is about 400 million people. That's the size of Europe or the US. And this is a structural story. People become richer, the middle class becomes bigger, and they move from subsistence living to becoming consumers. And as we sit here now, post the US election, with all the noise that that's created, it's important to note that this is a structural domestic theme that's particularly noticeable in India, happens elsewhere as well, but particularly in India, that is going to happen regardless of geopolitics, regardless of tariffs. It will happen come what may. And so companies in the portfolio in India, such as Loda, which is a property company, Vietnam is a very similar story in terms of demographics, and FPT is a retailer there. They are very geared to this story, and that's hugely important as we move into next year. In the middle, e-commerce. It's not a new story, but it's been around for a while now. But we're seeing rapid growth in Asian markets outside that of China. So Thailand is growing double digits. Indonesia, over 30% e-commerce growth in 2023. And companies such as Sea in Indonesia really play into that shift from the physical economy to the digital economy. And Naver in Korea would be another example. And then finally, in terms of the structural themes, travel is something that we've become increasingly excited about over the last couple of years. Asian travel growth is growing at an annual growth rate of about 4.5%. That's double the growth rate that we see in Europe. And companies such as Lemon Tree in India, which is the Indian version of a Premier Inn, if you like, are really geared to this structural growth story of, in this case, Indians taking more vacations, having more leisure time, having more money, and much, much better infrastructure in India, which enables people to actually go away for the weekend or a week, which was much, much harder a few years back. The last logo there is a Chinese company called Tongcheng Travel, which again plays into a similar story in China, with people getting a bit richer, having more leisure time, and wanting to spend their money on experiences rather than just on services. So the vast majority of our portfolio is focused on these domestic stories, about 75, 80%. Outside that, there are a couple of global trends that can also be powerful, and again, are not particularly linked to whatever President Trump may do in terms of tariffs. And For us, the vast majority of our exposure that isn't domestic is linked to the global tech hardware cycle. So memory chips, semiconductors, and Korea and Taiwan have global sustainable competitive advantages in these areas. And this growth is being supercharged by AI. The chart here shows the growth that's expected in AI, artificial intelligence linked hardware over the next decade. And you can see it's exponential. And this again is something that's going to continue. So in the US, something like NVIDIA is obviously on everyone's minds, but suppliers in Asia, such as Taiwan Semi in Taiwan or Hynix in Korea, as well as some of the smaller names in those markets, also are really linked to this story and have been a big driver of performance, which we expect to continue for some time. Despite the really strong story that I hope I'm painting, Asia has never been this cheap versus developed markets. This chart shows the relative valuations of Asia to developed markets on a trailing price to book ratio. And you can see it's pretty much at all-time lows. This was at the end of September. It hasn't radically changed as we sit here a little bit later on. So the structural growth story, combined with some really powerful global cyclical trends, in our view, absolutely is not priced into valuations. And that is a particularly interesting opportunity, perhaps, for the long-term investor. Now, the other slide I'd just like to go to and conclude on is just how we're positioned for these trends. So again, this is at the end of September. China and India are our two largest markets. China is seeing some growth. The government is putting some fiscal loosening, some monetary loosening is taking place. Valuations are very cheap. But there are many companies in China that do not meet our governance standards. There are some great private sector ones, but there's a lot of really bad government-linked companies, and we avoid all of those. So China for us is an area where you have to be incredibly selective, given the influence of politics on the economy and given the bad governance and issues on the social and environmental side. That said, we are able to find good opportunities that meet our criteria, which we never compromise on, and that we believe will benefit from long-term trends, such as Tongcheng travel that I mentioned earlier. India is an increasingly large part of the portfolio. As well as the Asian funds that I'm talking about today, we have a global emerging fund, but we also have a dedicated India fund as well, for those that want pure exposure to the Indian market. And we have the long-term trends that I talked about, the shift of the consumers, the rise of the middle class. India is the exact opposite in terms of China, in the fact that it has a young and growing population. China used to have that, it doesn't anymore, but India still benefits from that. It's the world's largest Gen Z and millennial population. And with Modi and the reform story that we've seen on the tax side, with infrastructure spending, this really is India's time to shine, we believe. And an Indian dedicated fund is a way to give exposure to that for those that want that. Modi was re-elected a few months back. And again, so we see political stability in addition to the very strong structural trends that we talked about. And on top of that, India's growth, unlike China's or Korea's, is driven by the Indian consumer. So it's very insulated from whatever may be going on in Europe, the UK, or the US, and has a very low correlation to those markets. So that's something, again, is quite attractive. And our portfolio there is very domestically focused. Taiwan and Korea, I touched on. The vast majority of our investments there are focused on the tech hardware space for the reasons that I pointed out. Then elsewhere in Southeast Asia, we see a lot of value in markets where there's amazing demographics like the Philippines, Indonesia. Singapore is a beneficiary of the e-commerce trends that we've talked about, Vietnam, and also Malaysia and Thailand. So that's how we're positioned going forward into 2025. There's a lot of excitement given the structural trends, in our view, attractive valuations, And whether that is a GEM fund, an Asian fund, or indeed the Indian fund, we believe that there's something very different to offer, which is great for the long-term investor.
That's really good. Can I just ask you a couple of questions there, Mike, at this stage? In terms of the China-American relations, I mean, there are geopolitical tensions there, and there's always talk about Taiwan in particular, and you touched upon semiconductors. Is that in the back of your mind a real concern, or do you think that'll just weather the storm and they'll sort things out? I mean, we just not say.
And no, let's unpack that in a couple of ways. So I think we are going to see a continuation, if not an intensification, of geopolitical issues between China and the US. In our portfolio, we do not own companies that are exporters to the US that would be in the firing line for any issues that come that way. Our portfolio consists of primarily domestic companies, whether that's in the tech space, travel, consumer, and they are linked to the Chinese economy, which is going to grow at about 5% a year, given the stimulus that they're putting in place, and will not be impacted directly by any tariffs that may or may not happen. So we've insulated the portfolio very well, I believe, from that risk. In terms of Taiwan, when I started my career, everyone was very concerned about North Korea and the impact on Asia. That risk hasn't gone away, but we've very much learned to live with it. And I think Taiwan, China is a very similar story. And the number of wars that we've seen, particularly the Ukraine conflict, has highlighted how difficult it is for a country to invade their neighbor. And Russia on Ukraine, they're next door, it's flat. Taiwan is an island and it's very mountainous. It would be very, very difficult for China to do that. They probably don't have the capability to do that. And the repercussions globally would be so intense. So it would be foolish to never say never in a world that we live in. But I believe in the near term and the medium term, the chances of that becoming an issue are very, very minor indeed. Certainly, in our view, not for the next 3 to 5 years.
Okay, I mean, that is reassuring. The other question is really, excuse me, about India. You did touch upon the fact that Modi was re-elected relatively recently, but I know that his majority has been watered down to some extent. So do you think the reforms that he's pushed through are going to continue being as successful with him? I know he's still in power, but is there the risk of that?
So the first thing to say about the Indian political system is that coalitions are the normal. It's very, very different from the UK. So he is part of a coalition now, and he wasn't before, but that was the exception rather than what this is. And he very much is the driving force behind that coalition. So his program's intact. It's possible that given his coalition partners, his Hindu nationalism may be toned down a bit, which wouldn't necessarily be a bad thing either. Will we see major reform in this term? We certainly hope so. That certainly isn't priced into the stock market, so that would be clear upside if that were to happen. There's been limited signs of it so far, but the story of India really isn't dependent on that. Again, having first visited India in the 1990s, you've seen the potential of that country for decades. And what's happened now is that Modi has unlocked that potential with tax reform, with infrastructure spending. You can't put that genie back in the bottle. You can do more, you can accelerate it with more reform, but if nothing happens, then you're still benefiting from that legacy, and India's inherent advantages of the demographics, etc., will benefit from that. And I just spent 2 weeks in India a couple of weeks back, visiting almost 40 companies across the northern India, as well as Calcutta and Mumbai. And the potential there is vast. And in my view, there are very few multi-decade trends in investments. We've seen some in my career, sort of China joining the World Trade Organization, Eastern Europe following the fall of the Berlin Wall. And I think India and that growth that we see now, in my view, we're in the very early foothills of a multi-year story, which we don't see being derailed by politics in the near term. But as always, it's for the long-term investor, I must say that.
Okay, excuse me, that's very encouraging again. One other question I've got is in terms of governance. I mean, if you think way back when people were reticent to invest in these areas because of potential for corruption and all the rest of it, bribery, where are we at now with that sort of stuff? Is that still strongly prevalent, or are you seeing a lot stronger governance standards when you visit these companies and when you select them? What are your thoughts on that, being, seeing it on the inside?
Throughout my investing career, and obviously throughout the lifetime of this fund, the governance bit is absolutely crucial to our investment philosophy. And I don't think you can generally say one area is better than another. I think Korea suffers generally from bad governance. If you put me on the spot, I think China is very mixed. I think India is generally better, but it in no way is a panacea. There have been some very well publicized headlines regarding corruption from some big Indian companies over recent months. We have and never have had any exposure to any of those companies. And when it comes to Asia as a whole, some of the biggest companies that exist in Asia, we again don't invest in because they don't meet our governance criteria. So I'd say over the last few years, it's got better. I think there are still some very big problems out there, and our process is very much designed to avoid those issues, which we have done successfully. Where we have seen dramatic improvement, I would say, particularly in India, is on the environmental side. If you go back 5 or 6 years, no one talked about green energy. Now, pretty much every company is trying to use more wind or more solar in their energy mix. And that can only be a good thing. We're always engaging with companies to do more, to give us more disclosure in these areas. And I was in Delhi 3 weeks ago, and the pollution was off the charts. And I saw it firsthand. And so that has now entered, I think, the psyche. And India really is, perhaps lately, but catching up with what we would expect them to do in terms of the environmental side.
So is there a general feel within the community at large that coal-fired plants are a bad thing, or do they still happy to rely on those for years to come? I mean, what does the general person in the street think, or do they get exposure to this stuff?
I think the answer is yes to both bits of your question. I think they accept it's a bad thing, but I also think it's going to be there for years to come. So the mix of energy is moving more towards renewable, but India is growing very fast, which means that unlike the UK, where we've got rid of coal stations, they are still there. They're still building them, but less than would otherwise be the case. So it's a relative argument, which is not great. But it's going the right way. Much of the pollution in Delhi is from farmers burning their crops at the end of the year, which no government has got a grip on. In the same way it used to be the case in the UK. I remember growing up, we don't do that anymore. And so it needs political control in a number of neighbouring states. It gets worse every year, and this year I think was even more bad than previous years. So we'd like to see some movement on that. The important thing is it's going the right direction generally, but probably not as fast that we would like sitting here in the UK.
Okay. I mean, those are the questions I had immediately. I don't know if you've got more within your presentation, or were we about there?
No, I think that probably gives a very good snapshot, but obviously we're always happy to be as responsive as we can with any further questions that you may have or your clients may have.
Brilliant, Mike. Thank you very much for your time. I'll wrap up this video just to say, if anyone's watching this, usual reminder, take professional advice before you invest. Come to somebody such as Good Green Money or another ethical advisor out there. This fund might be perfect for you, but until you have that advice, you won't know for sure. So little caveat there. Thanks again, Mike, for your time, and hope to catch up with you again soon.
Great. Thank you.